All right, all right. Welcome to Business Done Better. My name is Bobby Staten, the third Chief of Clarity at Bobby Staten and Co. And today I have the honor and privilege of welcoming Cameron Williams of KynLi Consulting to the platform. Today we're going to discuss a whole bunch of things. We're just going to kind of flow with this thing, but the center of what we're going to cover is financial strategy. When we look at, the upcoming year and even wrapping up 2023, we want to make sure that we're able to offer, advice, expertise, and really some strategic looks at how businesses, agencies can frame up their finances in preparation for the next year. So without any further ado, Cameron, welcome to Business Done Better.
Thank you. Thank you so much for having me, Bobby. Hey, I'm excited. Let's jump into it. Let's jump into it.
Absolutely, absolutely. So Cameron, let's start here. Tell us
Okay.
a little bit around about how KynLi Consulting came to be. What's kind of the impetus of your business, and what's the? I know you are a vision guy. Things are rooted in some principles and some values. So tell the people a little more about what KynLi Consulting is all about and what's your why.
Okay, cool. So KynLi Consulting, we've been in business for about 5.5 years now. We originally started, I ain't even gonna bore y'all with the long story, but essentially we got started. And what we wanted to do, of course, when we first got into the market was we just want to help people with their accounting. Well, the industry has evolved and our clients' needs evolved. So we were KynLi Accounting. This year we became KynLi Consulting because that's what our clients required of us. Our clients don't need me to tell you, like, hey, these are office supplies, those pins in that cup. Like, y'all are smart. You don't need me for that. That's something you already knew. But what they did want to know was stuff like, how can I scale, which is a very general question. But then
Right.
that turns into, when can I hire somebody? Can I give myself a raise? I don't think I'm paying myself enough or at all. How can we fix that? Which one of my service offerings are the most profitable? Even yesterday, we were on a call with the client and we didn't really talk about accounting. It was more so, these are my packages, but I'm about to do this huge webinar and I don't know what my offer is. I think I
Mm.
should do this. What do you think? So I literally broke it down and chopped it up so she could see that, hey, you're thinking this is the most profitable, but based on your time spent and the manpower that you will have to use, it's really this one. She was like, oh my gosh, I didn't know that. Oh man,
Mm.
that's easy. That's the one I love to do anyway.
Right.
Right. So then we started reverse engineering. So now we're a lot more into the strategy aspect, a lot more consulting. Will we handle the accounting and the bookkeeping for you? Yes, because that's the basics for us. That's elementary. We need that data. But then we're going to elevate it to where, let's start talking strategy, being proactive so that you
Mhm.
can not only be making more money because you're not so scared about, "Ooh, can I spend this?" We already can look in the future, but more so you can get some of your time back and enjoy your family and enjoy what you're doing because you have peace of mind. We literally had a client tell us, may have been 2 or 3 weeks ago now on a Friday. They were
Right.
like, we just appreciate you so much because since you come on board, like, we've been able to just focus strictly on going to get more business because I don't have to worry about the money no more. I don't have to try to focus on paying this person or do it. You guys take care of that. And I literally just checked their numbers today. Ever since they've been with us, they have been making over 10K or more since, and we've only been with them since like the end of July. So we're
Wow.
not saying these things just to sound good or sound fancy, right? We're saying this
Yeah.
because we know that we're delivering great results and that we can help you just continue to make more money, but do it strategically.
And I think that's so important. I think a lot of the clients that I work with, one of the very first things that we typically start with, especially if I'm working with a service based business, is helping them to understand the difference between a vendor and a strategic partner. A
Correct.
vendor is somebody who, to your point,
It's your phone
yeah,
bill.
yeah, exactly. There you go. It's your phone bill. But that strategic partner is now they're partnering with you at a high level, like based on your outcomes, right? What you want to achieve as a business owner, as a leader. How do we then structure service, not just service, but how do we even structure approach in a way to make sure that we're marching you forward to that end? And how do we measure
Yep.
performance along the way? And
Right.
there's just a much greater value proposition for that. versus, you can get anybody to run your QuickBooks, right? But having that strategic partner is invaluable, invaluable.
Correct,
So
correct.
I want to dispel a myth that I think
Uh-oh.
maybe it's not a myth. Maybe it's not a myth. That might be too much. But I think a lot of times in industry, you could
Uh,
probably attest to this too. They love the word scale, right?
yes,
It's
yes.
a buzzword, right? But I don't know that everybody knows what that actually means.
Okay.
Can you just, from a financial perspective, share with us like what does it mean? How do you differentiate growth from scale or
Got you.
grow from scale?
Okay, so growth is more effort. So
Mhm.
we would say in regular people English, like growth is just working harder. Will you
Yep.
get somewhere? Yes. Will you make progress? Yes. But you having to put forth major effort. Scaling is doing it strategically. Scaling is I'm not having to work more and I'm able to multiply my efforts. Ironically, I literally this past weekend just got through reading this book. I would say
Ooh.
you need to if you're a business owner, so must read. But
Yeah.
they would say growth is the 2x. It's
Okay.
I'm gonna put all my willpower and I'm gonna force it, but it's very linear. Versus if you want to take quantum leaps, you go 10x, and they tell you it's not
Mm.
about working harder, but it's about saying no to things. It's about putting the right people in the right places in your company and letting them be able to manage themselves and get you to the right outcomes while you
Right.
focus on strategy and being a visionary. So that's what we've seen, and kind of how we've learned the difference between those two.
No, absolutely. And I think the if I can just add a little bit to that, I think there are some economies that come with scale too, right? And I love what you said around it being a multiplier. If I'm doing the same thing in a slightly different way, but the impact that I'm having for my or that I'm creating for my customers is much more than it was for the amount of effort that I'm doing to me, that would be advantageous, right? I think internally from an operations perspective too, and I'm sure you could probably share more from what the book says, right? It said, I think the title was what 10x is easier than 2x. There's there's something about that grind and that 2x threshold that you don't have to deal with that 10x because it's easy peasy, right? And without promoting the book because it's somebody else's stuff. Tell me a little more about like an idea or a principle that the book outlines around what an economy of scale might look like.
So, and they gave a lot of great examples. So they were saying how, which ones I want to pick? All right, so they were saying this one lady was a real estate agent, and how
Mm,
at first she's just like a regular one, right? She goes out, works hard, books them, sells them, and of course represents the buyer. Well,
sure.
eventually her dealing with the calendar and all that back end admin was taking up too much time for her. So she
Hmm.
then hired somebody, an admin, to do that. Well, that freed up like 50% of her time. Well, guess what? I mean, she can make X amount more sales. Well, after a while, she realized, I like the sales side. I don't like the buyer side. So she went and
Mm,
found somebody and said, hey, if I bring all my buyers to you, you give me a cut of it. That'll work. So now she gets to put all her time into selling, which is what she enjoyed, and she still gets that cut. Well, after a while, repeat, repeat, repeat until
yeah.
basically she ended up running like two different regions, growing multiple offices. She bought somebody's office. So that was another thing.
Wow.
Well, then she was working her way up. Then she's the top person. Well, she's making great money. She's outsourced. She's doing great. But then they retire and say, hey, do you want to buy the company? And so she says, well, shoot, if I do that, well, now the next jump is I think they get like, I don't know this by heart, but 15 to 20% as like the main person for every
Mm,
sale that comes in, plus what you're already doing. So she's like,
wow.
sure, I'll be the broker. So now
Yeah.
she's getting, so that's 10x leaps. That's quantum. That's not just her working harder. That's saying no to these things that it's not that doing your calendar is bad. It's not the best use of your time. If you
Time.
spend 80% of your time doing those 20% of the things that you know will drive you forward, you're going to always make bigger leaps.
Yeah.
So that's like the concept in general of that book. But I think that's a perfect example of scaling because, hey, I could just keep working harder, or I could buy ownership and I get a little piece of everything. Then she did so great with that. Well, hey, if I'm gonna get 20%, let me go find more me's, more great people. So then
Exactly.
she did that. So now I'm getting 20% of the great people. Then they said the overall like headquarters was like, hey, we want to go take over this region. We need you to do it. Her next big jump was she goes to her brother-in-law and says, hey, I need you to be me so I can go over here to, I think it was like Columbus and Kentucky. So then he follows her for like 8 or 9 months. He just her shadow. So now he's her. She goes
Wow.
and repeats this whole process. So now she has 2 regions doing the same thing. And she just gets to spend her time basically training the different leaders or the directors or the managers and
Yeah.
letting them flow down. So that's an example of how quantum leaps scaling works, but she has the same amount of hours versus I'm gonna just be this real estate agent and just I'm gonna settle for being the top agent. So
Right.
that's a great example. And I mean, you even hinted at it like with systems, it's the same thing. Just in every asset of your business.
Yeah. I remember, man, when I graduated college, one of the first books I read was Rich Dad, Poor Dad. And it was groundbreaking for me. But one of the things that I recall from that book that definitely aligns with what you just said was he talked about the importance or the difference rather between creating, starting a business versus creating a business system. That
Yep.
business system is going to pay you what I like to call mailbox money, right? You've created the system, it's working in and of itself. You're collecting a royalty, revenue, whatever the case may be, from the performance of that system
Yep.
versus being the technician in the business doing the work, always scrapping for the next dollar, the next deal. And I think to your point, that's spot on, man. Like when you think about growth versus scale, those are great examples that you provided around how to distinguish one from the other. Um, Good stuff, man. So let's talk about financial strategy a little bit. I think
Okay.
we're now right, exactly, Birdman hands, right? We're probably about halfway, not halfway, close to halfway through Q4, right?
Yep.
A lot of people are talking about, what's your 2024 game plan? Some people are just filing their tax return for last year, right? Under the last deadline just passed October 15th. So, you got people kind of on different. I didn't mean, I should have gave you a trigger alert. My bad.
I mean, if y'all want to hit that failure to file penalty, y'all go right on ahead.
Yeah, man. But you got folks that are kind of, across the gamut, right? But at the root of it, it's setting your sights on the next year, right?
Yep.
What am I doing from an objectives, a goals, key outcome standpoint, and all of that trickles down and is really underpinned by your financial strategy. When you think about your clients or even prospective clients, right? What are some of the things that you're working with them on to kind of set the stage for the next year?
Okay, that's a good question and a deep question. So I'm gonna try to keep it super concise.
Okay.
So things we're working on literally before we got on this call. So I'm trying to make sure that their numbers are as accurate as possible. So we're in November, so we're doing October's month end close. So what I'm looking at is these things I forecasted for November and December, do they still hold up? So
Mm.
client, let's say their revenue dropped. Well, I don't need to keep predicting that they're going to make 80,000 when they've shown that they're only going to hit 30. So
Hmm.
I need to adjust that. Or if they're not spending X amount, then I need to adjust that. Whereas back in July, it may have made sense based on what they told me and what we saw.
Right.
So I think I literally just posted this. Like, this is the time where we have to remember us as business owners are always evolving. You need to be meeting with your CFO, your systems person, your CMO, because what you may be dealing with may be changing. And that's part of growing as a business owner. So I need to know, like, if you just came from a conference and changed some of your strategy, come back and tell us so that we can modify what you have and let it be an accurate reflection of
For
what's going on
sure.
here. So that's one. In regards to planning for next year, where are you going to end this year? Like, are you somebody who set $1 million, but you're only going to hit 400. What went wrong? Like, we need to analyze that, because I'm pretty sure the goal is going to be probably the same next year. We talk about payroll. Like, what is that looking like towards the end of the year? Do we need to think about bonuses or extra checks, or what does that look like? And preparing for next year, what are your taxes going to look like? What entity do you need to be? Are you an LLC, which may be great, but you just need to know you're going to pay them self-employment taxes, which is going to work better.
Yeah.
Or do we need to start looking at possibly being like a C Corp or an S Corp? Like, is that the thing now? Because maybe 2 years ago you didn't need to be, versus now that making not only optimize tax savings, but save you cash. It needs to do both, by the way. Don't just do one, both. Save cash and save taxes. Because I'll tell y'all this, because TikTok be lying to some of y'all.
Man, what you talking about? Yes, sir. Come on.
Because you save on taxes, as in IRS taxes, doesn't mean you save money. And most of you, if not all of you, always really deep down, I want to save cash. So don't think I can just switch to an S Corp and everything is good. Yeah, you may have saved on federal taxes, but you would have just moved a lot of it to your payroll taxes. So just be cautious with that. Please consult your CFO or your accountant. Have them run the mock-up for you. Like, that's what we do. When we make that suggestion to our clients, it's a whole printout with a chart, my suggestion, because so we literally show them. Like, there was somebody I told, no, you don't need to be an S Corp. And they were like, are you serious? I was like, I'm so serious. Here's the numbers. And they were like, man. Now, that was last year, 2022. This year, 2023, it made perfect sense. So always be evolving and checking in with your finance team so that you're on track to do what it is that you want to do.
Yeah, no, I think that's gold. And if you could, I'm sure it's not as straightforward and simple as this, but I'd love to get your perspective. What is a rule of thumb for determining whether it's time to transition from an LLC to an S Corp or a different form of entity?
This is a very popular question. I would say there's not a flat number. It's not like once you get to 100,000, do it. Because the factors that you really should be paying attention to, which again, your CFO or accountant should be able to tell you this. One, do you have the cash? Let's just keep it super simple. If you don't have the cash, then it don't matter if you're going to save taxes. You can't afford to make the switch. Number two, I'm trying to make it easy. Is it worth it? Like, okay, it may save you on taxes, which we just talked about, but is it going to save you cash? And then when is the best time? Because like, I literally made a post the other day where I said, if you don't pick being an S Corp by, we'll just say December, don't even waste your time. Because you may, if I can do a late election in March, you can. But if you do it correctly, you're about to get your face slapped badly. Because think about it, right? You're going to be on payroll now. If I'm in March 2024 saying I want to be an S Corp as of January 2023, they will say, oh, okay, cool. But you realize you have to now pay the payroll taxes you would have paid had you gotten paid every other week or once a month. You got to pay all that at once, plus penalties and interest because you didn't file it on time. You're in March. That was all due 12/31. That's the part that a lot of people get, well, I can just, if you're doing it right, that's how it's supposed to go. So that's why, like right now, if it hasn't been done, you might as well just wait to start January 2024 and start fresh. But I would do the analysis now so that everything can be set up and ready to rock and roll come January 1st. So it's not I know you probably wanted a straight number, but the best thing I can tell you is go to your accountant, go to your CFO and say, hey, can you provide me with an entity analysis? Because I feel like maybe I should be one, but I want to know for sure. Like we literally just signed somebody 2 days ago and they had already started. I started drawing it out. They were like, wait a minute. The lady didn't tell us that. You know what I'm saying? They're like, I didn't think about it like that. She just said we should because I asked her about it and she already started. And I'm like, well, You know, there's some things we can do. I'm like, well, maybe we bring salary down. They're like, we can't do that. Whatever.
Mm,
So this is one of those things that you want to be really sure. That's not to say you can't revoke it, but you can't go back and forth. Like this year, let's be an LLC. Next year, let's switch and go. No, when you make that
no,
switch,
that's it.
5 years and that's it.
Oh,
So
there's a 5 year like requirement. That's
right. So like
fair.
if I'm an
Okay.
S corp and I say I want to go back to being an LLC, they're gonna say, okay, you can't go back to being an S corp for 5 years because they don't want you switching back and forth.
Okay.
So that's why if
Okay.
we're going to make this decision, let's be certain. Let's back it up with the numbers. So now it's not just emotional buzzwords I heard from social media. I
Hmm.
have my financials. This is what my person told me and why, and I see the savings. I wish
Yep.
I could show y'all, but I can't. But
Yeah, sure.
literally,
But
that's how you have to do it. Like I told them, if they're not looking at your financial, because that's where most of this answer is. Like we
yeah,
need to know are you profitable? Okay, let's look at your monthly net income. If your salary, let's make up easy numbers, right? Let's say
sure.
I'm going to get paid 5K a month, right?
Yep.
Well, this is a different answer. If my net income is only 6K a month, you don't have the cash. So my first answer is
Mm,
going to be no. But let's say you got $10,000. Okay, well, you got 10,000 left over. You want to make five, so there's a 5K difference. But you have
yep.
to remember, and all of us have worked a W-2 job, that 5K, that's not really 5K.
No, it is
That's
not.
probably $6,823.75,
Exactly.
right?
Yep.
But add to that, so that's what we have to take out just to get you to 5K. Well, remember, you're a company and you're the person. So I'm
Hmm.
KynLi Consulting the company. Well, I have to match your payroll taxes. So that may be another $500. So what we thought was just 5K may really be $7,222.85
Exactly.
when it's all said and done. So now you really don't have a 5K cushion. Now it's
Right.
about 25,
2,800.
26.
Right.
So when I start saying that, people are like, what?
Yeah.
Don't forget, you got to pay for the compliance. So you got to pay ADP or whoever, Gusto, their fee just for them to do it for you. And don't
Mm,
forget, you got a different tax return now. So your tax person going to charge you more to be an S corp because I have to do a completely different tax return. Oh,
mm.
by the way, on this tax return, they go up every year and add more standards. Oh, and that
Mm.
AI everybody love using, yeah, they starting to use that in taxes too. So
Really?
why would they not? Everybody else does. You don't think that there's a way that they
Ooh.
can figure out how to filter who's in compliance and who's not based on certain standards?
Mm, 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 mm.
And I mean, the standards is technically really simple. Like if you're an S corp and you don't have a W-2, that's an easy catch. Oh, this person said they're S corp. I don't see any W-2s. Flag,
Flag. Mm,
automatic. Because what? That's the whole purpose is to put you as a W-2. So if
right.
you're an S corp and you're not on a payroll salary, not just hitting the transfer button, not just writing yourself a check. If you're not on payroll with the W-2, just know your chances of getting audited
Are high.
have now jumped.
Mm,
And
mm.
now think about it. Now, let's say you don't have financials. Now we done bumped it up again. So it's a compounding thing. So that's why
Yeah.
I'm like, weigh all the costs. Because you may,
Yeah.
as an LLC, you may can get by without accounting. I've seen it happen.
Sure.
If you're making like maybe like 8K a month, you may have you a really good Excel sheet. I've seen them. And I'm like, hey,
Sure.
bravo. But when you're an S corp, you don't even
Nah.
want to play like that. You want
Yeah.
it to be on point. I can match this to the tax return, etc. So
Yeah.
that's why we make sure they literally count up all the costs before we pull this trigger. I don't
Yeah.
want to say it's no going back, but for all intents and purposes,
Yeah.
that's
Yeah.
it.
No, that's really important to know, man. I think a
You
lot of
seem
what you
stressed
said.
because
No,
I told
I'm stressed for the listener because I'm like, listen,
you.
just even thinking about what you're sharing and having lived it, right? Like there are pieces of your financial landscape that you just have no business fooling with. Like if this is not what you do, let it go. Like go find you an expert and get somebody who can get your financial picture in order. Stop
I'm gonna
playing
ask
with
you
your
this because
money.
you're an ops guy. Have you ever seen them on TikTok break that S corp down like that?
Never. So what you just said is gold.
But
Like
see, on
I've
social,
never
they'll just
seen
say you should be one because it's gonna help you. And I'm like, or my other favorite one, hire your kids. And I'm like, well, hey, Cameron, they told me you can hire them. I'm like, you can.
it. You
Did they
can.
tell you all the rest? No. Or this is my other favorite. They said, what's the new? I can buy like a Jeep or a truck
The
because it's
G
over
Wagon.
yeah,
Yep.
it's over 6,000 pounds. And I'm like, did they tell you like the qualifications though? Nah, I should
Mhm.
be able to do it, right?
It's not the
I mean,
same.
you can if you do, like if the car is used for business only, if
Sure.
over 70% of your business, if not more, is for business use.
Right.
Otherwise, it's just a regular car, and you need to track your mileage just like the person who riding a Sonata, they Hyundai.
Exactly.
You know what I'm saying? And
Yes,
then if
sir.
you're going to take all that depreciation, if you sell it early, the IRS is smart enough to say, all that depreciation you took in that first year and you sold the car the next year, yep, we're going to give it all back to you. I'm trying to tell, like, the IRS is not stupid. I know we try to, we can outsmart. They put
Yeah.
stuff in place because they know people are going to try to outsmart them. Why
Well,
would I
well,
let
that
you get it all and then you sell it the next year? No, you need to take some of that depreciation back,
appreciation back. Yeah.
right? And then we go from there. So it's not as simple as, and don't get me wrong, I post tips on there, but I try to make sure if it's going to be something in relation to a buzzword topic that I'm going to try to give you within
Give them
2
the full
minutes.
picture.
Yeah, because I mean, clients will call, yeah, I thought I could hire well, your child is like 2 months. I don't know. You can hire them, but it has to fit these. Or your kid is 5. Like my kid's 8. I
Yeah.
can technically hire them, but there's they have to be in child labor laws. They can only work so
Right.
many hours. Whatever I pay them has to be what I would pay a normal person. So if I'm gonna call my kid an admin assistant, and you can finesse that, like, oh, she empties the trash, files papers,
Sure.
prints papers. Okay,
Sure.
but in Atlanta, Georgia, what is
Yeah.
the price of an admin assistant? Probably in the 15 to 20 range.
Easy.
So I can't just say, oh, she makes $1,000 an hour, so I can hurry up and get her to the 12,000 deduction that you're trying to get. No,
Mm-mm.
you don't pay
No.
anybody $12,000 an hour. So you have to say, hey, she works 20 hours a week at 15. You can put them at the top end of that range, $20 an hour. This is
Sure.
what I pay her. It has to be a check. Can't go straight into retirement. If
Mm.
you have benefits, you have to now offer them benefits. Like that's what I'm saying. It's not just the buzzword. I know it's catchy,
Buzzword.
but if
Yeah.
you go to the IRS.gov, that's your buzzword. That's the
Yeah.
real. That's what
Yeah.
counts.
Yeah.
So it's
Yeah. That's
crazy.
what's gonna put you behind bars. So be mindful of what the baseline is. I think a lot of what you share, the detail, that's the difference, right? It's a lot of times what you see in social media, people are doing stuff for clicks or for scrolls, whatever the metric is. But understanding the nuances is not a straightforward answer. The truth of the matter is, if you're working with a professional, they should be walking you through those details in a way that ensures that the decision that's being made is best for both you and the business. And so, just to recap, for those who might have missed something in between, I'll say this: this is not me paraphrasing, but the election to move to an S corp
Yep.
should save you taxes
And
and save you cash.
both. It's not
Boom.
an either or. It's
It's
both.
got to be both. That's it. That's it. So let me take this question and now I'm gonna push it back to startups. Right, Atlanta
Okay.
is an emerging tech market. Right, just a
Yep.
couple of weeks ago or last month, I went to the Venture Atlanta conference, which I didn't realize it was that big of a deal. Like people from all over the country were at this conference, huge pitch competition. I'm like, okay, it makes sense that Atlanta would be a tech market, especially given the schools that are here. But just seeing how invested people are in the startup village, if you will, was
Yeah.
great to see. I would love to hear your take. We talked about what existing businesses could and should be doing as they prepare for the next year. If you're
Mhm.
talking to a startup, somebody who's just starting out,
Yep.
what are some of the financial fundamentals? Like, hey, when you file that LLC paperwork with the Secretary of State, your next move from the financial side should be this. What are some things that you would advise on there?
All right, next moves. I would say business bank accounts. It can be a personal, but you need to designate. I'm only going to use this for business, and I'm only going to use these other ones for personal. Because whenever you do come to somebody like myself, or even somebody like Bobby, that's more on the system side, we're going to want to look at it because if you're merging personal with business, like I don't know what you're doing. I don't know if you're profitable. I don't know if you're making
Right,
money, and it's going to
right.
make harder. And me and Bobby's time is, not cheap. So if it's
Nope.
gonna make me do more work, I'm gonna have to up
Yeah,
the price, and that's anybody across the board. So get a business only one. So you may go in, they're probably gonna ask for I think your license, the letter from the state, and you probably got to move like $50 or $100 over. Very
yep.
simple. Or if you got personal ones, just say, hey, I want to open a new personal one, and this is what I'm gonna designate it as. So that's one.
True.
I would say another one is have vision. This isn't finance related, but you need to
Yes.
have a goal for what you're trying to do. Like when I started, I just wanted to help everybody, right? It was
Hmm.
very hard for me to filter, and I didn't know any better because they don't teach you this in school.
Nope.
So after a while, I ended up at marketing agencies as the niche, and we do these specific things. So try your best to have a goal. If you can afford it, try to get in some type of mentorship group because
Okay.
you can skip so many road bumps by just going straight to a mentor and asking versus trying to figure it out on your
Figuring
own.
it out.
You're gonna waste so much time and money and stress because remember you're the owner. You have to know how to market, do sales, be the technician, be the HR person, client relations, be good with
Hmm.
your own tech, build your systems out, everything. And
Absolutely.
most people are their brain works in like a few of those, not all of them,
Not all of them.
right?
That's right.
So you gotta remember like Bobby's great because his thing is systems, right? He is gonna kill it there. He may be like, I hate sales though. But you gotta go learn sales because you're not gonna make no money,
That's
right?
right.
Or like in my case, I'm an accountant, I'm more analytical. Marketing is super challenging for me because my brain just doesn't think like that. So I had to go
Hmm.
get courses or walk with some people and ask questions. So don't be scared to find you. I would suggest 2 or 3 mentors. My mom would say one that look like you and one that don't. So do that. She did say that. She was
I
like,
love that.
you need one that's gonna be black and one that don't look like you because they're gonna
Yeah.
operate 2 different ways and have 2 different perspectives.
Perspectives. That's so true,
Definitely.
man. That's
So
so
that's
true.
the easy one. I wouldn't worry about tax coming out the gate because you got to show proof of concept and make money. If you don't make money, you're not getting taxed, right?
That's it. Yep.
Don't come out the gate trying to be a S corp or a C corp. Stay a LLC until you got it going.
Yeah.
Um, that's probably where I'll leave it at that. I'm sure I can come up with other stuff, but we'll just leave it there.
No, that's good, and I think I love to also hear. So let's go a little further beyond proof of concept. You're making money. I think one of the things that I think a lot of people overlook is the importance of leverage, especially in those early years of growth.
Hmm.
What would you advise from like a financial infrastructure perspective around like, hey, here's how to set up, here are the different types of capital that you
Hmm.
should probably be pursuing to make sure that when you look at your growth um, path, that you have adequate support financially to support that. You're not just relying on cash flow.
Well, people are different. So, like, I was cash only for a long time until probably like this year.
Okay,
But it helped me because it's literally either I got it or I don't, or I got to go out here and get it in order for
get
me to
it.
get
That's
cash.
right.
So that's one. Some people like that. I just want to be cash only. Me, I knew I was going to do a lot more traveling, speaking, webinars. So I'm like, man, how can I help myself with that? Well, that's when credit cards came into the picture. So we got like Amex and used Sky Miles, and then American Airlines and used their system as well. So then that's a different level of discipline. You can't let those credit cards get out of control, or there's that whole deal. So there's those. Of course, you can take SBA loans or some type of loan. I would not suggest taking a merchant loan. Those are the ones where, like Stripe, for example, you can get a loan from them. They have all your information, so it's, I'm gonna say, relatively easy to get. The problem is every time you get paid, they get paid.
Yes,
so you may make $1,000 and you like, yeah, they just gonna take out their little 3%, and they gonna say we're gonna take that out, plus we're gonna take out 10 or 11 because we want our money back from that loan.
Yeah.
And you don't want that. So if possible, the best ones I've seen are like SBA loans, like from a bank or a credit union, versus going through a merchant processor. They're just brutal with fees. And it's very, very hard to get out of them. We even have a client now who was mad because he got in some loan, didn't tell me, but they're taking like money out of his account every week. And we're not talking about hundreds, we talking thousands. And it's auto draft too. We don't want no credit card on file. It's ACH, my guy.
Yeah, so, let me get that.
I'm trying to get out of that to get it, or like roll it into an SBA loan to pay it off, and then have something that's only a one-time monthly payment. Sure. So there's that one. Some of you may be lucky enough to have a parent that's doing really well or have their own business and they can afford that investment. That's probably there's no interest attached to it, so that can either be a gift or just an investment. So that would be a good one. But those are probably the main ones kind of starting out that you can look at. But I'm kind of a big proponent on that first year or two. With me being cash only, like it forced me to, this is what it is. I guess I can't go. I guess I can't get that because I don't have it. Or if I really want it, let me go try to get a sale. Flip that money to get that. So I think it built something within me to where it helped me to view money as a resource. It's not an idol or a god or nothing like that. It's a way for me to get where I need to be. It's a way for me to get into this room where people that I need to be talking to are. So did I probably miss out on some stuff?
No. I think you hit the head. The other thing that I've heard talks about is the importance, especially once you transition to a place where now you're paying people, is lines of credit. What's your viewpoint on that? Like if you have, because I know credit cards, lines of credit, there's advantages and disadvantages, right? So maybe we talk a little bit about that. If you had to compare and contrast the two.
Line of credit is probably more flexible because, like, so going back to me, so we use, like I said, Amex for everything not named. Your mortgage, they not playing that. Nope. Payroll for the team, they not paying that. Payroll for yourself, they not playing that. I feel like those are like the only one. Oh, health insurance in Georgia, they not playing that either. True. Everything else we put on a credit card so we can rack up those points. That helps us to pretty much fly free, for lack of a better term. Yeah. Now, line of credit, they gonna give you, it's like giving you all the cash up front. Right. So if you get a $25,000 line of credit, here's 25 grand of straight cash in the bank, which you can utilize to pay the team. But I would challenge you, if I got to get a line of credit to pay the team, that's really signifying a deeper issue that line of credit is really not going to fix. It's really just a bridge. That's telling me we're spending too much money, right? That we're overpaying, that we're not getting enough clients coming in, that our systems are slowing us down to where we can't collect the money fast enough or they're not getting to the client. So we shouldn't be taking a loan to pay the team something crucial like that. If we're getting a loan, I'm just trying to build up my credit because I know I got bigger goals. Like I try to use my card for, like if I'm going to a conference, Okay, well, I know me going there, the knowledge I'm going to get from that, I'm going to make this up, or I can get a
Yep.
client there maybe. So that's going to pay for it and then some. So you want to think about your lines of credit as a way to advance you further or get you in a room, I would say, not
Yes.
to, well,
Make
I can't
ends
pay my
meet.
bills, therefore do using it that way.
Yep. No, that makes total sense, man. That makes total sense. And I think when you think about what we talked about, right? Proactive financial strategy. I think what I've also heard is having someone like you on the team in the room and your expertise, your vantage point will help keep you out of those situations. What are, if you had to tell people, these are, let's just call it three signs to know you need to go find a CFO or get you, some financial help. What are some of those like indicators that are kind of consistent and for what you've seen in business?
One, you hate doing it. Because if you and I both know if you hate doing it, you're gonna procrastinate, you're gonna do
Yep.
it halfway, you somehow conveniently forget all the time, or you
Yep.
just do it wrong. So if you're like, hey, I'm great at strategy, I'm great at marketing, but I'm terrible at numbers, that's probably one of your first hires. You need to go get the numbers guy to help. So that's one.
Hmm.
Another thing that would probably be a good indicator, maybe you were decent with numbers, are pretty good at it, maybe. But now your time is starting to get wrapped up because you're trying to do something in QuickBooks that's going to take you 4 hours. That would take us maybe 25, 30 minutes because
Mm.
it's not intuitive because you're the marketing guy. So
Right.
that's a great time to offload that burden. You're probably making enough money at this point. It's not going to be about, and I think that's something we have to talk about too, like the mindset, especially if you're coming from a bad background. It can't always be just save, 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 keep it all for myself. I can
Yep.
make more if I go pay this person. You take that off my plate, I get 10 hours back. I can go do something else
Hmm.
for that 10 hours. So I
Yep.
think you have to think about it like that. Another indicator will be you may be in a bad relationship with your current accountant, and hey, they're not proactive. They only talk to me if it's a billing issue. I only talk to them literally when it's tax season. That's probably not a good fit for you after your beginning stage. Your beginning stages is fine. But once you hitting like 15, 20,000, you can't be ignoring me, bro. I need help because I ain't never paid 2K before. You know what I'm saying? Like, think
Right.
about what we're saying. There are some people who make 15,000 or $20,000 a month. Most of America does not make that type of money unless you're
That's
probably like
true.
an athlete, entertainer, doctor.
Sure.
So if you've never made as much money as you're making, do you think
Hmm.
you would know everything to do with it?
No,
Probably.
sir. No.
That's when you need to, hey, I didn't know my business was gonna blow up like this, but I know I can't handle all of this on my own. I need somebody to partner with me. What does that look like? I mean, it's gonna be the same thing with Bobby, right? Like everything can't be up here. You have to write out your systems and processes. It doesn't
Yeah.
matter all these tech stacks that you're gonna buy. It don't matter if you don't still get the system right because it's just gonna do what you tell it to do. So hey,
Woo.
I know I can't leave the company because if I leave, everybody stop. Well, you go to Bobby. Bobby finna have you diagramming, writing it out, telling your life story and your goals. So that way you can
Right.
automate it. And
Yeah.
now, but you wouldn't know that until you start making
Go through the
money
process. That's
because
right.
you're in the process at your current job or at your old, you're already in the system. You're
Yep.
the owner now. You have to completely create the system. So when you
Yes.
start getting to points where you're like, I don't know this, or I got to start reading book, that's your cue. Yes, you're not gonna have 20 grand in the bank. Okay, pay somebody. Now you got 15. You know you're
Yeah.
not used to having 15 in the bank like that.
Yeah.
Happen every
Yeah.
month. Look on ahead and
Right.
do it.
Right. Right. Absolutely. You said something there, man, about technology. And we've talked about AI in this conversation as well, too. When you think about, now it was more so on the audit side, but when we think about just where technology is headed and really the integration and the importance that it can play, and making sure that, from a financial processing standpoint, that things are in place. I mean, you tell me, from a consulting approach standpoint, how important is having the right tools to ensuring that your finances are in order?
The right tools are important. I still will go back to the right strategy because, like,
Okay.
I've seen even in my own business, right? Like, I've used, I think, Asana, Carbon, Monday, and I don't forgot the other two. Probably tried ClickUp, and I had
Mm,
to learn it's not about the tech. If I don't have my systems right, the tech not gonna fix it. I'm gonna just have new tech.
correct.
Uh, So I
Yep.
think having the system or the process or the fill in the blank here
Yep.
and writing it down, even if it's on paper first, the tech part will come after because you can make the tech do what you want.
For sure.
So I'm not going to say tech isn't important because we use it, right? But I think, which you know this, like I just said, you're going to have them diagramming and writing, all of that.
Right.
You want to get that. That's the fundamental. I think sometimes it's just like in basketball, right? Everybody want to come out there trying to shoot like Curry from half court. It's the fundamentals. Like you don't know how many
Yeah.
free throws he shot. You don't know how many
Right.
mid ranges. Then he's shooting with his toe at the line. Then he's
Yep.
taking one step back. Then he's trying, okay, let me catch it and go straight up. Okay, let me do it off the dribble.
Right.
Okay, now let me take 3 steps. Like you have to get those fundamentals before we jump straight into tech.
The half court shot. Right.
Yeah, you
Exactly.
can't do that. Or well, let me rephrase that. You can, but then you can't be upset or frustrated when you don't get the same results as Steph Curry.
Yeah. No. Truly. So let's dig into results, and then I know we gotta roll. When you, especially in the types of agencies and companies that you're working with, what are some of the, I won't put a number on it, I'll just kind of let you freestyle it, but when you think about like KPIs, metrics, what are some of the things, if you had to highlight, let's just call it five or maybe even three, whatever makes sense, metrics or KPIs that every business owner should have a handle on, what would those be?
Mm, KPIs. Okay, I would probably say or metrics. One, cash flow. Like I think let's try to keep it simple. I ain't gonna try to confuse y'all. So cash flow is always important because, like, just to keep it super simple, do you have the cash or not? Let's
Yep.
try that. I think tax savings is important because we hear this all the time. Like, I had no idea that I was going to have to write this big check. Well,
At
if
the
we
end
were
of the
saving
year.
throughout the year, or
Right.
if you had a CFO like myself who can look forward and say, hey, like I can tell all my people right now, hey, I'm pretty sure you're going to pay about 50 grand. But I would have been telling them this since May. So they
Right.
would have been putting money in the account the whole time. So
Right.
I think keeping something, I'm going to just say start out with something. I'm not going to give you an exact number, but
Yep.
start out with something just to get in the habit of all of this 20 grand, 50 grand, 10 grand is not Cameron's. I
Yep.
know part of it has to leave. So
Yep.
cash, tax savings. I think you want to keep your payroll definitely below 50%. It's always going to be a top three, give or take. But typically,
Mm.
9 times out of 10, you're talking a top three expense across the board. You want to
Yep.
be trying to keep that as low as possible, but within reason.
That makes
Okay,
sense.
you can't scale without people. So we're not saying try to do it solo, but it doesn't have to be 50% either. Try to keep it in that 30, 35, 40% range and put those parameters in place. Like there are some clients we have that they literally said, if you see it go over 40, please tell us because we don't want that. So
Yeah.
that
Right.
um I don't think paying yourself it should be one we should add because depending on what season you're in, that's a different answer
Yeah,
too.
that can ebb and flow. Right.
Let's see, top five. Your debt, I think, is important. Like at any
True.
point, could you, I don't want to say clear it, but could we make payments? Like if your credit limit is 30 grand, we don't need to
Hmm.
keep it at 29 just because. But
Yeah.
you have to also look at it and say, well, is it 29 because I'm overspending? I don't have the cash. We don't have the sales. Am I just trying to keep it all in the cash account and I really got it? Like keep that
Mm,
debt to income ratio relatively within means. We want you to use it because if you don't use it, then they're gonna close the account. You using it does help your personal or business credit score go up, but
yep.
just be very cautious with your debt. And always look at your AR. AR is a big one. Most people send out invoices. You don't want to be a person that's never actually collecting, right? Once it hits
Right.
90 days, it's time to make a decision. Either
Yep.
we're going to go after them, we're going to have a phone call and tough conversation, or we're just going to wave and say
Write it
uncollectible.
off.
One of the
Right.
three, right? So you don't want to be one of those people who I have invoices from 2022 still in my financials. You need to
Mm.
let that go. You're not going to get that
Yeah,
money.
you're not gonna get that money. That's a
And then
wrap.
you also need to be looking at it from the standpoint of what is like my average cycle. Like when I charge people, are they paying relatively quickly? Or is this
Mm.
something that they're going to, I don't get money from people to 60 days after I bill them. Well, that could be why we have a cash flow crunch or we're having to use the card more because our AR cycle is just way too long. That system
Yeah.
is broken and it needs to be fixed. So that's where you get in with Bobby to either say, hey, we need to revamp this system, and
Hmm.
or me and Bobby together are coming in and saying, hey, your AR is too slow. And Bobby may say, hey, why don't we redo this contract to make payment terms like this, this, and this, and this, or whatever that looks like. So I think that's
Yeah.
fine.
No, that's a great example, man. I actually one of my favorite cut case studies is actually for a marketing agency that had that exact situation. AR cycle was like 60 days. And this is a situation where yes, we needed to revamp the system, but we also needed to reconfigure the tech because the tool was not being leveraged in a way that would allow for more speedy invoicing. You'd be surprised how simple things like automated reminders, you know what I mean, auto draft. QuickBooks has a whole lot of secret, I'll say, mechanisms that most people don't know about that you can use to kind of help you to speed that up. And so you're absolutely right. I think that AR piece is one that is common in addition to the other ones that you named. Uh, Cameron, I can sit up here and talk to you all day about finances and how we can help people to improve them. But I want to wrap this conversation up. Tell us a little bit about your soon to come ebook.
I gotcha. Okay, so the ebook, we literally just finished this like 2 Fridays ago. It's called 7 Marketing Meltdowns. So if you're a marketing agency, this is perfect for you. This is something that because we go into conferences, we're in those masterminds and they're our clients, we know a lot of the issues that face them. So what we wanted to do was come up with something where, hey, here's a scenario. If you fix it, you get these benefits. If you don't fix it, don't be shocked if you face things like these. So
Right.
we think it's a great resource. We finished it. So we would love to give it to your audience just so you guys can have it. But I think it's amazing. I've never heard anybody talk about it from the financial side. I've only
Right.
heard of them in a general, like I'm going through. Like we talk about systems. Well, hey, if you don't have systems, it can cost you money. You can miss out on leads. You can't ever leave your company.
Yep.
That's what happens if you don't fix it. If you do fix it, then this will allow you to scale faster, which we talked about earlier. You'll be better peace of mind, better longevity, et cetera, et cetera. So we kind of walk through it, but look at it from the financial lens of how it can affect you based on those 7 different topics we talk about.
I love it. I love it. Cameron, where can they get in contact with you? I know we got the website here at the bottom. People want to get in contact with you. They love what you share. What's your recommended first step?
So first up, you can either go here to the website, which is KynLi Consulting, KynLi Consulting.com. So that's where you'll see some of the fancier, pretty stuff. If you want to just connect with me personally, I'm on Facebook a ton. That's where a lot of our clients are anyway. So just shoot me a message. Cameron Williams is the name. You'll probably see a picture of either me and my wife or me or the kids, depending on
Yep.
what the picture is. But just shoot us a message there and connect. We would love to help you. With it being the end of the year, diagnostic calls are really popular right now, just because a lot of people are like, I need you to make sure these financials are on point, or am I missing something? Is it right? And I'm
Right.
looking at myself and I need to know, can you fix it? Because I just created a QuickBooks account and I linked it, but I
Yeah.
never touched it. So this
Yeah.
is like the perfect time for those. So reach out to us. Bobby definitely has all my information. And we can just kind of work through that, because sometimes it's you need us. Sometimes you need us and Bobby. Sometimes you need us and a CMO. Like you may need a whole C-suite. I don't
Yeah.
know until we
Sure.
dig in and look at it. But hit us up on Facebook, and that's it.
Sounds good. Well, listen, thank you so much again for your time, your expertise. I think so many gems have been dropped in this. I can't wait to get the feedback from people who are blowing up your inbox because of what you shared today and also improving their businesses. I think that's the biggest thing, right? At the
Yeah.
end of the day, what we're here for, what we're about is helping people to do business better. And so, again, appreciate the time. If you're open to it, I would definitely love to do it again. I think finance is a
Do it.
conversation that should always be at the forefront. So, yeah, I appreciate the time, man, and we'll chat again soon.
All right, man. Appreciate it. Thank you for having me, and can't wait to do it again.
Absolutely, brother. Talk soon, man.
All right. See ya.
Yep, yep. Hey, thank you so much for listening. I am so passionate about equipping and empowering entrepreneurs. If you can do me a favor, take a few seconds, like, comment, and subscribe to this channel, whether you're on YouTube, Facebook, or LinkedIn, doesn't matter. Let's help make sure that other people are able to experience what you just did. All right. Thank you so much for your time. I'll see you next time.